7 terms every investor should know. That's what we're talking about on this episode of Beyond the Stock Price. Hi guys, and welcome back to another episode of Beyond the Stock Price. It's earnings season and a lot of companies have just announced what their 3-month and their 6-month earnings have been. So with all of these earnings reports floating around, I thought it would be a good idea if I did a video about some of the most common terms that you're going to see in articles or in reports published by different media houses about the earnings that the companies have just released. So in this video we're going to look at 7 of the most common terms that you're going to see in reports as it relates to a company's earnings, particularly around the earnings period. So the first term is revenues. So what are revenues? Revenues are basically the total sum of money that a company takes in from its operations. That is from either the services that it delivers or from the sales of products that it manufactures or produces. Different companies will recognize their revenues at different periods, and some of them even call it different things. For example, in some companies that buy and sell goods, the revenue is termed as a turnover. So different companies will actually call their revenues by different name based on the nature of their business. So for some companies that are in the manufacturing or production business, they might call their revenues a turnover. And particularly if you look at, for example, a baking company, you will either see the revenue listed as the total turnover or the total sales. Other companies recognize their revenues from like investment or from trading in securities, and they'll record their revenues as interest income and other revenues. The second term is gross profit, and the gross profit of a company is the total profit that they make. It's basically the difference between the total revenues and the expenses that they had. Okay, so the next term is net profit. So what's a net profit? So the net profit is the money that the company has remaining after it has paid for taxes, after it has paid its interest expenses, and after it has paid its finance costs. There are also going to be other expenses that the company might account for before it records its net profit, and these might include gains or losses that are outside of the normal operations of the business. Okay, so the next term we want to look at is the earnings per share. And typically when we talk about the earnings per share for a company or a stock, what we're really talking about is the net profit divided by the total amount of shares that are in issue for that company. We call that the weighted average number of shares for the period. So basically, when you're looking at the earnings per share, what we do is we take the total net earnings of the company, which for some of them might be hundreds of millions of dollars or for even some billions of dollars, and we divide that number by the total number of shares that the company had in issue. That is the total number of shares that were in the hands of shareholders for that period. And remember, the reason why we have to use that number, which is the total number of shares in issue for that period, is because the total number of shares in issue can actually change from one period to the next for a particular company. And there are numerous reasons why that value could change. It could be because of share buybacks, or it could be because of persons exercising share options. Now, those two different things can actually affect the earnings per share either in a positive or a negative way. If a company issues more shares, that is whether it is by a rights issue or whether it is by stock options that are exercised by the directors or top management, that could actually cause the earnings per share to decrease if the earnings were not significantly more than the period before. In the same way, the earnings per share can actually increase if a company does something like a share buyback, where they buy back some of the shares that were in issue from the existing shareholders. So that's basically the earnings per share, and it basically tells us how much money we as shareholders are earning for each stock that we have. The next term is market cap or market capitalization. The market capitalization of a company is basically the market value of that company. It is calculated by taking the total number of shares, multiplying that number by the current stock price. Doing that will actually give you the going market value of the company, and we call that the market cap. The next term we want to look at is the book value. Now, the book value of a stock is also a calculated number. It's calculated by taking the total assets of the company, which you can find on the company's balance sheet, and subtracting any intangibles such as goodwill or the value of patents, and also the liabilities of the company. When you do that, what you're left with what we call the book value of the company. And if you wanted to get the book value per share, you would just divide the total book value by the total number of shares that the company has in issue at that particular point in time. Okay, so the last term we want to go over is the PE ratio. Now, the PE ratio for a particular stock or a company is another calculated value, and it basically tells us how long it will take for the company to basically earn back all of the money that we spent to buy the stock, provided that the earnings are constant. The PE ratio is calculated by taking the company's stock price and dividing it by the earnings per share. And we already talked about the earnings per share and how it is you actually come to calculate that. Now, what does the PE ratio tell us? The PE ratio is basically a means of valuation. It enables us to basically determine how long the company will take to earn back the total amount that we spent for the stock. So say for example a company has a stock price of $100 and is earning $5 per share. The PE ratio for that company would be 20. Alright guys, so that basically wraps up this video. We're looking at 7 terms that every investor should know, and particularly as it relates to the earnings of a company. So if you have any thoughts or questions, be sure to leave them in the comments and I'll be sure to get back to you. And of course, if this is your first time on Beyond the Stock Price, please consider clicking on the subscribe button. That should be right down here, and clicking that bell so you get notified anytime we upload a new video.